Hey traders, Stacey Burke from Stacey Burke Trading. A short video today on trading ranges. We've talked about trend trades, we've talked about reversal trades, we've talked about the three levels of rise. I talk about level 3 trades. I'm looking for level 3 all the time. Today I'm going to go through trading ranges and we're going to look at some textbook perfect examples that have been happening over some of the major pairs, and again reviewing the 100 pip boxes. Just a quick review for people who ask the questions again regarding the trading 1 hour a day, the timing window. So go back and review the timing 3-hour windows. We're going to get a bit more in depth on some of the trade setups, the different types. I've talked about level 3. We're going to talk about the timing window trade setups on level 3 a bit more in the next few videos, but the high and the low of the day, the year, the month, the week, and the session. So again, level 3 on any time frame can set you up for large moves. And again, level 3 on the longer time frames, when they all align up, you know, the month, the week, the day, the session, we can get some large scalable trade setups. Major round numbers, double zeros and 50s. Again, I got this question yesterday. Somebody says, I completely don't understand what you're talking about with those numbers. What does that mean? Where did you get that from? It's the price. Price. I don't care what instrument you're trading, it's the price. 250 pip boxes on some of the major pairs can be large quarterly movements, and again, that's when we line up the larger, bigger plays. Daily charts, looking at the bias for the month. Then the weekly template, the 3-day setups. Again, a 1, 2, 3. People are asking, what is the 1, 2, 3 you keep talking about? Go back, watch all the videos. It's in every single video. There's a 1, 2, 3, whether it's 3 pushes, 3 bars out of peak formation. It could be 3 levels, 3 hours, 1, 2, 3. So it's just how price behaves. Go back and review the videos. It's everywhere. So today, talking about trading ranges, and just to review quickly, I talk about identifying the 100 pip box. I know there's people out there who have messaged me and told me that, you know, this is rubbish and everything else. It doesn't matter to me. I could care less. I don't care what anybody thinks. What I know is when there's a level 3 trade setup, bang, I'm hitting it. And as many people have seen, these are trades. You're not in the market. You're sitting waiting. And when you take these trades, they're done and dusted pretty fast. So I could really care less what anybody thinks, because this happens every session, every day, and it's going to continue to happen. And instead of chasing this other retail nonsense, and it's nobody's concept. I didn't come up with this. This has been around since the beginning of markets. I've just paid the price, learned from as many people as I can. I'm not here to pat myself on the back like a lot of other people out there. I'm just telling you how it is. And when you see this, you can't unsee it. So to review again, 3 things that markets do. The only 3 things that markets do. They break out, they pull back, and they trend. They break out, they pull back, and they reverse, false breaks. Or they are in a trading range. Today we're talking about a trading range. So simple definition, trading range, easiest simple definition is it just trades back and forth between the low and the high. A trading range refers to the difference between the high and the low prices in a given trading period. Range-bound trading is characterized by prices staying in a definable range over time. A trading range is characterized by both a support price and a resistance price, between which the price tends to fluctuate. So I've talked about 100 pip boxes, and it's every single day when I start the day, I'm looking purely at the day itself. And I talked about this yesterday. What level are we in within that 100 pip box? Last Wednesday, we broke above 100 pip box. So again, the 3-day setup, Monday, Tuesday, consolidation between 100 pip lines. It breaks out on the Fed and goes into the upper 100 pip box. It goes 1 level, 2 level, 3 levels, pulls back in the gap, and continues up to the upper part of the 100 pip box. Now, there was no news on the calendar that day that I'm aware of. I've just checked again. I don't see anything, but you can see they continued to take it up into the gap, locking in double zeros with a pin hammer, and bang, 100 pips into the open of the U.S. session. Now, trading range. So just in terms of that particular day, we had 3 levels of rise. For those of you who, you know, just again, Asia put a low in at 25. They continued the next 2 sessions up to double zeros. That's 3 levels of rise. Bang. But then into Friday, again, we go back to 75. We drop it down to 50 in London. They continue the move in the gap The U.S. session takes them down. So for those of you who keep asking, what's a 1, 2, 3? 1, 2, 3. Now 1, 2, 3 on a 15-minute chart is obviously 45 minutes. If you're using 1-minute charts, I talked about time compression. Just understand that on a 1-minute chart, at around the 40-minute mark, you can get some great trade opportunities if they set that up in the same shape or fashion, whether that's to the high of the day, to the low of the day, to the high of the Europe session, whatever that may be, at 40, 45 minutes, 35 to 45, 35 to 50, somewhere in that range, you may have a 1, 2, 3. It might start in the 15 minutes before the session. This is a 1, 2, 3 up, just a different variation. It's 1 push, 2 pushes, 1, 2, 3. 45 minutes into the session open for a 45-minute move down. But the point I'm trying to make just on these charts is that we have 3 levels of drop. It started at 75, they went to 50, they took it down to 25, they pulled it back, and they took traders short. But look where they took them. Traders are shorting this, and they're shorting it into the previous day's low. They put a low in. So if you come to the screen prepared, you could say to yourself before the day begins, we possibly have a peak formation low locking in the double zeros up top. We've just got a vertical move from the high. Doesn't necessarily mean that's locked in. But we may have a peak formation underneath. Why? 1 push, 2 push, 3 push. It means nothing to me until I see how price behaves down here. They could blow right through that. But what did they do? They dropped it down 25, 25, third level down into the previous day's peak formation low, which is a W formation. We'll blow this out again. It's 3 pushes, but it also forms a W inside and then a shorter leg, and it goes back up. They start the move at 75. They put a peak formation in Asia. So notice where the previous lower high was when the day closed. It's up at 75. They go up and hit the high. Traders are chasing this back to the high of the day, into the peak formation. They're chasing that into the peak formation. And just again to zoom in on this, we have the first 15 minutes. This is a 1, 2, 3 reversal. 1, 2, 3 reversal. So they take you into the high. The third bar is the reversal. But we're inside of a 100 pip box. They take it down 3 levels for the vertical move up. Now, how many levels up did they go? They went from 25 to 50 to 75, and we have 1 push, 2 push, 3 pushes. Now, that's possibly going to lock in 75 as a high. I don't know if that's going to happen, but I know that in the rollover, they drop it down and they push into that, forming an M formation before dropping down. So at that stage, once this drops down, it's safe to say that 75 may be locked in on the third level. You'll notice they pushed up just beneath the double zeros, which was a stop hunt into the previous day's high. And again, we start the day. Asia goes down to 50. They get traders chopping back and forth inside of the Asian high-low. So even though they've hit the low coming down, that's the low for Asia. They're just pinning back and forth, chopping people up, and they drop it down another level. Traders short this, holding on for the move maybe back all the way down somewhere. But they hold it into the gap time, and they get down to the lower third quarter. And again, you'll notice that third quarter in the gap time trades into the previous day's peak formation low. So we're doing 3 levels of rise, 3 levels of drop, back and forth in a trading range Friday, Monday, Tuesday so far. They go vertical, they take out the high of Monday, tap just briefly up near the high of Friday, and they go into consolidation, and they reverse before the end of the session into the consolidation again, inside 75 and 50. So again, we close as a neutral to red day. The market has since now traded underneath of 75 and dropped down. They've pulled back into 50, and they're currently dropping down again into Monday's low. Sorry, this was Friday here, and Monday's low. The pink line is our Friday-Monday divider. Now, this may break through. If that's the case, we have a break in structure, and we may be seeing the beginning of this rollover. I have no idea. This is not a trade recommendation. But I know we've come down 1 level, 2 levels. We're in the 3rd level right now. So how price behaves here will determine whether or not this is a breakdown, which means that this could
be dropping and pulling back and rolling over, or we could be breaking down and hitting stops, and they might work this into a low for a reversal. We still have a couple of hours, 2.5 hours before London opens up. So there's plenty of time for this to move around. The point I'm making today is we're in a 100 pip box. This is just a trading range. That's all that this is. So people have all these indicators and all this other stuff on their charts, and all this is a trading range. They drop it down 3 levels into the peak formation low. They engulf it. In the gap time, we have our first little inside bar engulfment. You'll notice the short in W. So I got a great question from a trader this morning. He was looking for the reversal trade on the 3rd level. Once these markets break out and reverse and go vertical, do not counter trend them. Do not counter trend these moves until they have cleared out the board and they exhaust themselves and go into consolidation. They could have went up another 25. Do not counter trend these moves. They are not going to reverse until they clear everything off. This is the move starts just below 50. So 3 levels from 50, therefore, is 75 and double zeros. But we get up to double zeros and it fails to follow through. We get our middle structure on the big pin bar, and then our M structure at the high of the day after they've cleared out the lower highs from Asia and London. So currently we're still in a 100 pip box. This could break down and roll over and still close between 50 and double zeros and be a red day for a possible move down. We have news on the calendar this week, but again, trading range. Euro yen is a fantastic example of a continuation out of a trading range. We went into consolidation again on Thursday after the Fed. They went up another 100 pip box. They stayed above that. They went up towards the double zeros. They stayed above 50, and you'll notice trapping volume, 3 peaks, and then reversing. They're trapped in the upper quarter. They drop it down from 75 to 25, and trapping all these traders, they hit the stops. They pull it back up. They hit yesterday's high on Monday, high of the week, for a 50 pip move down. Again, pay attention to where the volume is trapped. The volume is trapped up high in the box above 50, below 75. That they're sitting ducks. This is low-hanging fruit. They trigger breakouts at the high of the week, the high of the day, the high of the session, before locking it in and reversing. So traders who are looking to continue this short are getting jammed into the low, which again you'll notice these lows are trading back into the previous day's peak formation lows. So they're jamming people into the shorts. Traders who shorted up top are taking profits. Other people are looking for the continuation in New York, trading back into the low. This is the first mouse up top. Today I was watching this to see how it was going to behave when it got up towards the high. And again, now you can see we're in a breakout continuation of the original move that brought us up from the Fed and from the previous few days going into the Fed. So they've brought it up. They've gone into consolidation. Traders were looking for the reversal off the high of the week. They didn't get that. The market has continued to go higher. Do not counter trend the market. Just taking a step back and looking at gold. A lot of people don't like gold. They think it's a little too volatile. And so again, if you're working from the outsides and just coming back to the numbers, 3 levels of rise and fall. The market moved up 3 levels in Asia. Came back in 1 push, so it puts a high in. Then we get 1 push, 2 pushes, and a 3rd push reversal, and you'll see again there's the 1, 2, 3 down. When you see 3 bars in any time frame going in one direction, it's either ending a move or the beginning of, it can be a measured move, it will be a stop hunt, or it can be the end of a move. Point I'm making is that if you step back and just look at price, all this market did was jam people in between 75 and 50. Okay, and I'm going to really hammer home to people, in order to keep you safe, don't try to trade inside here. Do not trade this. You will get chopped up and you'll be getting angry and frustrated. You'll be going in both directions. You can't figure out which way it's going. Do not trade in the consolidation. Wait for the market to go back to the high or to the low. Now this is textbook because they jam everybody in. They hit stops and trigger breakouts. They go back into consolidation and do the same thing on the downside. So they hit stops and trigger breakouts. Usually the first triggered breakout, false break, reversal is the direction the market will be intending to move, but they're trapping people first who are wanting to trade in that direction, and then they hit their stops. And a great question again from somebody else, why didn't they go down? And there's traders in the money on the bottom. And I said there wouldn't be enough volume down there, retail volume, going long early. They're all short. And obviously the question is where's the real money? The real money was probably up here from shorts, holding on, whatever, hedge funds, I don't know. And I said, don't worry, they'll come back at some point and get these guys, which, of course, inevitably they did with the pin. Take a look at where this pin ended. Right at the previous day's low. So they go far enough to get the lows of the current day. They don't go any further to allow anybody out with take profits possibly below that or at that level with the spread. And there obviously wasn't a lot of money going into the close on Friday that was buying up off the low. They only went far enough to stop out the bulk of where that money was. If you don't think these markets are calibrated and completely point specific, think again. And then, of course, we get the vertical move out of the consolidation, which was a squeeze, a short squeeze for the explosive move. And again, you can count the 50 pip boxes, 50, 50, and 50, 3 levels of rise before pulling it back. And then looking at today, just to hammer home the 3 levels of rise and fall. Okay, we'll zoom this out. The market goes up into the close. Just take a quick look, and you'll notice the market went up 100 pips. So they put in a peak formation at the end of the night or towards the end of the session. Okay, they went down 25 pips below. They lock in double zeros, and they go up 100 pips. They close the market between 50 and 75. Okay, they give us our little rectangle. I'll zoom in on this so people can see. We're above 50, but not quite at 75, but we're trading back into the peak formation that locked in 75. They gave us a little 3-push pattern. Okay, there's our M structure 15 minutes before the session opens. There's our 3 pushes into the high. Okay, they lock in the high, engulfment, pin hammer, M structure, pin hammer, vertical move. If you're not in this, no big deal. There's our geometrical structure. We wait 15 minutes. First 15 minutes is usually a false move. They lock in the low in the first 15 minutes. 3 pushes, 1 push, 2 pushes, 3 pushes. They drop it back down. There's our pin, second 15-minute candle. There's my entry on this bar. Anywhere after that close of that candle on the break of this open, the break of the low, whatever, there's our 1 bar stop. Second 15-minute bar. So again, timing. It's you can argue about price and where did you get in and everything else. Pay attention to the clock. I cannot emphasize that anymore. 15-minute rotations. Critical to understand. They broke down. So traders are looking for the long off of 50 back to the high of the day. They had locked in the high. Possibly they could have went back up, except they broke down again. Second 15-minute bar opens. It's broken down. They pin back up. I'm short. Now, coming back to our 3 levels of rise and fall, where did we see the peak formation lock in? Down at double zeros. Maybe they're going to go even further. They didn't. They got down to the double zeros. And what did we get down there? 3 pushes and a little engulfment. So if you've missed this move, there's a measured move at 25, continuation engulfment. Then we had our W, and the timing of that W was at 3:55. Chart time. 55 minutes into the hour, which is right at the end of the hour. 1 hour down. Next hour takes traders up into the peak formation. They come right back down into the low. When you see the market coming back right down into the low, they're taking everybody right into the low. They're filling all the profit gaps and making sure anybody who's in the right direction gets stopped out at break even before they pull away. 1 push, 2 pushes, 3 pushes into the low. They break structure. Okay, they break structure. That's the lower high. Then they auction around 25 and move away back towards the original move where it started. 100 pip box trading ranges. Work from the high and the low. Manage your risk. Keep it tight. Wait for the best trade setups. Have a great session. Hopefully you got value from today's video.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburktrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.